Okay, today is Thursday, is March 13th, 4 p.m. Market close. All right, so we had very, um, well, let's talk about the yesterday, maybe the monthly bar. Monthly bar, pretty bearish, and I marked last week these levels saying that we're gonna sell into these levels. We already got three of them. We might continue to sell. This is the trend line I want it to be tested but if we continue to break it, the next target is 53.74.50, and I like to see a very strong bounce back to the trend line. But first we need to cut it through. But today is we actually tested to the tick, very accurate. This target is, I had another target, but we didn't test it on the lower time frame, which I'm going to talk about it tomorrow. We might come down and test it. So the weekly chart, weekly bar is we gapped down this week, and we strong. Okay, I guess it's a strong week last week. It's got a lower wick, pretty actually significant, but we moved underneath, so we're coming down. There was a gap here. We closed the gap and we bounced, but we couldn't really close it with the body. Now, this week is not over. Tomorrow is Friday. I like to see follow through tomorrow a little bit more and then reverse back up. So maybe tomorrow we could come down and then close the bar somewhere up near the last week's low, and give this a lower wick. Okay, that is pretty long. So that would kind of weaken these legs down, and we could finally reverse back up next week. We'll see. Or we're going to keep selling into the 100 SMA, which is now the next support, or these lows. Okay, so market is still making its way down, but let's talk about daily. Is daily yesterday was a bear bar. Today opened where it closed, is went up a little bit and then continued to come down. We have tested yesterday's low. We're trying to close below it. It would be better if we can actually close today also 2 days ago. So this is Wednesday, Tuesday, Tuesday's low. But we tested both days lows, and but if we can close today below the Tuesday's low, we could come down tomorrow a little bit more and then go back up. We do have a wedge bottom 1, 2, 3, so we'll probably go to reverse eventually. And but market is trying to come down to here. I don't know how quickly we could get there. That is just too far away. Okay, it's about 237. What is it? No, what is it? So yeah, 237 points away from. So we're not going to sell that quickly tomorrow, though. News-wise, um, we have consumer sentiment in the morning, but obviously that's not going to bring market down 200 plus points. It's not going to happen. So that's that's not realistic. We could, however, 1, 2, 3 reverse back up. Okay, tomorrow test maybe tomorrow could be a inside day. We could have a doji. Okay, inside day like this, and then next week Monday we could go up again. Okay, perhaps we could get a double top and try to come back down. I don't know. But if today closes below Tuesday's low, we could tomorrow come down and test today's low and then reverse back up. Okay, so so that wedge is nice, but it's still trying to. I don't think we're going to be able to. Where's yesterday's low right here? They have to now sell and close somewhere here underneath the moving average. Is the hourly chart? We had first hour was bear bar. We had to test yesterday's hourly bar 7 lows, which we did close the bear body, but it's not all that great. So bulls second hour bought a little bit, but because this first hour was a bear close, we follow suit and fill that lower wick. That's momentum. So the next hour, the third hour, will be actually a bear body, most likely. And because it's momentum bar 1 and 2 on the hourly chart, bears immediately sold the close of 2. It continued to sell into the prior lows. Both bars 3, 2, and 3 strong closes. Expect the next hour, fourth hour, to test the bar 3's low. Fourth hour is also bear close. Even though its lower wick is rather significant, we should be still tested slow before reversing back up. The Even if we go up, you are going against a tight bear channel, so probably sellers above, and bears are trying to have a double top bear flag, and tomorrow sell further down. Tomorrow we could actually get a test and then reverse back up. So we'll see. This is the last hour. We pretty much sold and went sideways with a double top bear flag. Excuse me for the interruption. All right, so we have the Globex range. We have the Asia session, broke down midnight into London. London had a trap, double bottom, lower low trap at the trading range lows, and immediately reversed back up. So, but it's sideways. It's been going sideways, kind of. This area is a trading range. This is a breakout. We need a pullback and then try to sell, and that's exactly what they did. So we're testing that trading range. That's a pullback. I'm sorry, this is a pullback and this is sell, right? And but it wasn't good enough. Why? Because you're selling into somewhere very bullish, where the bulls were pretty strong, got a breakout. So there are bulls waiting there, and it just goes back up, back into this trading range, and can't actually close above the key level. The key level is the Asia mid and midnight open. So when you cannot see bull bars closing above it, this is setting up to be a swing short for the rest of the day in US session. Okay, so that's what we have right now. We did have a breakout around, I think that at the end of the second hour of the Globex session. We went back and retested and kept selling, so we had several legs down. But finally, a trend needs to go into a trading range, pretty large trading range here. Now, what's happened here is that we had a bullish gap bar. We came down, we failed to close it. Some will say this is actually closed, but the problem here, the reason why we're suddenly bullish, is that the bear body 15-minute bar is not overlapping and not necessarily closed, so you still have open here. So this, to me, this is open right here. And that creates this bullishness back up to here. So that's what's happening. So this was a buy zone. I actually kept the zone pretty large. And you could see how we came down, never broke it. And finally, we found buyers. So how did that all work out on the 5-minute chart? So we opened up right here, 15-minute bar. It's the gap down, but it's not all that big of a gap, but it is a gap down. Now, at the open, I generally look at patterns in relations with yesterday's price action. Okay, so we have a wedge top, maybe double top, maybe wedge top, double top, higher high, trap bulls, lower high. We're making bear flags, so I expect several more bear flags. Market is bearish because we are below the higher time frame, so I'm looking for rejections from the moving average. Bar 1 is a doji. Bar 2 is yet another doji, but they're closing bear bodies. So market is in a small trading range. Sellers above, buyers below. Buyers try to buy below the first doji, bar 1, but they couldn't close a bull bar, so sellers immediately stepped in. And then they sold, and bar 3 closed bearish. That to me is a 3-bar small trading range, and a breakout. So therefore, I'm looking for 1R and I'm looking for 2R. But I might have, so this is how you should measure. So that was the 2R. We almost got it, maybe like a one tick failure. But we did get it. So market sold nicely. And um, we have a gap body here. But what are you selling into? You should always look left, right? You're in a trading range. You're in a trading range, right? So is, but look at here. So we took that out, but we could not take that low. So that means is all of these lower highs are unprotected. This is yesterday's, which I'm going to do the same exercise for today. Now look at here. Bears took out here, right? This is great. So your stop, but what else is there? Hold on. Yeah, so but this was 3 times. So bears took this one out, right? Your stop can be here. Or now we take this one out. Now that stop moves down to here, right? Now we're taking that one out. That stop now moves down to here. But the problem here is we have moved 3 times. 1, 2, 3. So when it reverses, it's going to look for stops. So you're going to be exited out of here because it could even go all the way up here. So think about that. You're in a trading range. It's doing the same thing. Now we could not take out this low, okay? So your stop should be not only here, all the way up here if you're swinging this, because bears want to swing this down. If they put their stop here, right? We did not take out this low. They can go up and run the stop. Now they tried to run yesterday, but they failed, okay? So now we're taking that and taking that probably, or we're gonna try to take that out. Those stops were moved down to here. So we are taking this one out, which is great. Now stop moves here. We did not take this low or that out. So it's gonna try to get back up to breakout and then further up here. If we get to the breakout but not able to go further up, and if there is some kind of a gap here, we sell, and then we take out these lows. Swing bears will move the stop down here, okay? So what does that mean? Because we couldn't take out that low, we had a major reversal back up to the moving average, and that's what I'm trying to say. So you have nice 1R and 2R bears, but because this is trading range lows, and right around here, buyers are waiting. And you can get a double bottom there. It's a sharp reversal and market reverse back up. So you had a big low, okay, big gap down, and then big reversal up. So you have confusion. But the problem here is we are still bearish. 5-minute EMA is below the 1-hour EMA. I should be looking to sell. I'm not really happy selling against a strong bull leg. I know that there will be buyers wanting to fade the very first bear bar that they see, and that bar is bar 12. Immediately, they try to buy the close low, and then they try to reverse the price back up to the bar 10 and 11. We have gone up and tested bar 11 close, but we could not close a bull body, and the bar 13 collapsed back down. That tells me bears will want another leg down. So they will probably going to sell now. Now, where do we sell? 50% of this bull leg, or further down, if you can count, this is actually leg 1, pullback, leg 2 is pullback, and leg 3. So they will come down and test the leg 2 starting point. Leg 2 starting point, or the pullback lows, is low of 9. And bears sell with the second leg all the way to low of 9 before we reverse back up. Bulls try twice, but because we are below the moving average, because we have a gap body, therefore probably we're going to get a double top at the moving average. Bears looking for some kind of a bear flag. Bulls try to reverse back up with bar 17 and then bar 18 and 19, but totally failed. So we're not able to close above moving average, and we're getting another rejection bar. because bears want to come down and test the bar 6 low. So that means this is a double top bear flag. First sell is, and then second sell after two-legged try by bulls. So that means you have another bear flag here, maybe wedge, maybe double top, but you have a flag. So if we start to take out the 18 low, then we're going to come down. 18 bar reversal did not start all that strong for bulls. For one, bar 18 is a super bearish bar. So right there, it's telling you we're not going to get an 18 bar reversal back up to these highs. Not going to work. So this is now a trading range. It was trying to become a cup and handle, totally failed. We're not getting good bull bars to turn into a bull and then a measured move up. We're not getting any of that. So now this is coming down. Now what do we need? I need a good bear body. Bar 20. Nice spike. Sideways. Another double top. 21 and 24 high. That is a bear flag. Everyone will sell. Probably bar 24. Problem here is that we're selling kind of at the lows. But there are no reversal bull bars. Now they have tried buying lower. And one can wonder, how far was that? That was about 15. That was about 20 points. So 20 points below, bulls started to buy. Their goal is to get back to the bar 7 body, the very first bull body before the strong bull leg or the bull leg that started with, which is bar 7 body. Nothing is overlapping. That means we're not bullish. We're never going to go back and test these lower highs. So this means this is a basically wasted effort. It's an outside up bar, but why couldn't the bulls close the body of bar 27 or 28 or 29 somewhere up here? Then they would have bought the pullback and we could have gone up. That did not happen. So now you have another double top here, is maybe with the 25 high, is maybe with the 24, 27. So now we're coming down. It's another bear flag. There you go. 29, everyone's going to sell 29, but it's a small trading range. If you do sell and they trap you with bar 31, you're going to sell at the top right here because this is basically two-legged move. So somewhere here, sellers are waiting. We reach there and then they sell. So anybody who got trapped underneath bar 30 with bar 31 got a break even there. But they're still not able to close bear bodies. And now they've tried 2 times, 34, 36, 37, and then they're trapped. This is it. So you either exit out, hoping that the bulls are going to be able to close above the moving average and go up. So they had an attempt. I mean, that's a good try, but again, put a line there. Are we able to overlap? No, that means these gaps are not closing. So basically, this is a trading range, getting a breakout, making another trading range, making another trading range. So it's like a trending, like stepping down large trading ranges, but really in a bear channel. So bears failed. We made another double top here. Really nice second sell, right? Maybe is low 1, low 2, or rallied up low 1, low 2. But either way, it's a nice double top, bear flag. And we go back up. Now we have another one. This is pretty strong, makes a new low. That's a breakout pullback. Bear flag, you can sell. You can sell underneath 44. Now it's turning into some kind of stop order market that is a lot better than here and a lot better than what happened here. So they do sell, but it's not really becoming a major breakout with big bear bodies like this. So this is not all that great. Plus the bulls are kind of giving you a warning that these big bull bars, this move down here is not going to be lived long. So you should be actually counting legs. So here's leg 1, pullback, leg 2, pullback, leg 3. You have a wedge. We're going to probably get back the spike pullback channel, that area. And that area is right here. And we finally reversed and we went back there. Bears try to get a double top there, failed, so we went up to the next one, which is this trading range, or is, you can say, this is this area of interest. And we try to break once, we try to break twice, and that became a good swing um, right there around 3 o'clock. But how far can it go? Well, we are now in a trading range, and right there is all we could do. Now, you could, I said in the trade room, all this is actually hinted early on. You can tell how the rest of the day is going to behave by looking at the first hour. Okay, so take a look at what's going on here. Big sell, right? Big sell is, and then reverses is right back up. So this is confusion. So the rest of the day is going to be confused as well. This right here is kind of dominating and telling you this is a characteristic of today, and you're going to get the similar price action rest of the day. There you go. Sell, go back up. Sell, go back up. Even though we're coming down because we're bearish, we're below the higher time frame moving average. So you should expect price moving down, but in the same fashion as it did first hour from bar 1 to bar 12. So pretty much set the tone for the rest of the day. You would know this because Al talks about it all the time. If you want to learn more about this, watch Al Burke's price action course, how to trade the morning session, the mid session, or the end of day session. But really, mid and end of day session will always reference back to the morning session and how the first hour decided to trade. Once we have this trading range and we're breaking, so it's probably, L will say, is we probably haven't seen the low of day yet, and we'll probably never going to see the high of day because we're taking that out. So we must have a measured move down. By the time we get to that measured move, so much time is going to be passed. Okay, spend is the best the bulls can do. Maybe try to get back up to these highs again, right? So that's, and I did say we're going to come down to that measured move, but don't expect is a strong bear day is due to these bull bars. And what has happened here, market will try to get back to this leg. They've tried here, failed. They have tried here, failed. So we're going to come back and test it, but we're no longer making new lows. So tomorrow, I think market is going to want to go back up here and test this area, but we could sell once again. So tomorrow, mark this high. Okay, market could get there, can come back down, find the 50%. If we do not move underneath the 50%, then we're going to go back up and then break out to the upside. However, if tomorrow, find your resistance, top of the trading range, find your support, the bottom of the edge of the trading range, find your midpoint, we go up here, we make a high, and then trap everybody. Because what do we need? We need 3 legs for both sides, and we need 3 legs for both sides. So 3 legs for bears and 3 legs for bulls. Until we make those 3 legs, you're gonna get nothing but failures from the edges. So it's gonna be like this. Here we go. Right? Here's a leg 1, leg 2. So it's probably going to go, and here's a leg 1, leg 2. Here's the 50% going up. We're gonna probably come down, trap again. This time we go above the 50%. We could break out from there. Or we're gonna go up. We're gonna go up, is trap. We're gonna come down, break below it, retest it, and then sell. Okay, so the third leg for bulls, that's leg 1, leg 2, could come down a little and then go back up. That could be the third leg, and then come down. If the bears break the lows, then we're going to keep selling tomorrow. But if the bulls do the opposite, then we're just going to keep going up and probably overlap here. And this would become the magnet, and then yesterday's high become the magnet. Tomorrow, Fridays do like to swing a lot. So it's a really good opportunity. We either squeeze the bears out of the market and the bulls come in, or we're going to trap the bulls and then squeeze them out of the market, and then we're going to keep selling tomorrow. So we'll see how that goes. But yeah, so the first hour always shows you some kind of a characteristic of how the rest of the day can trade. So pay attention to that. So is bar 1 and 2, small trading range, is and a breakout. Trapped, bar 3 trap, so limit bears selling above the 1 and 2 because those are doji. And is you got these stop order bears entering from underneath bar 3. From there on, you have stop order market, sell underneath 4, maybe even sell underneath 5, but you started to get lower wicks. Now you have bar 6, you're gonna look left, you're probably entered some kind of a low of a trading range or buy zone. So you get this bar 7 is very nice bar, but both dojis. So what does that mean? Two dojis side by side, basically signaling you that it is the end of the trend. So look for a reversal. Bar 8 is buy the close, close a strong bar. So you can buy one tick above. And then bar 9 is pretty good. You can buy above bar 9, but you're buying very close to the moving average. And you're buying very close to these upper wicks. So probably sellers there once again. So if you do buy, you're going to have to take some profit. You got a doji inside bar 9 is you have is bears. You had a bull combo there, but it went up. Try to get a breakout and the bear bar closed. Now you have a bear combo 12 and 13. So most likely bears will now try to close a bear body. They did. So you have a bear breakout from the bear combo. You can sell the close of 14, sell below 14, sell the pullback. Okay, T is lower third. This right here is the combo, so that's the lower third right there. Or the breakout point, they will sell. If we don't go back inside this is here, I'm going to mark it. If we don't go back inside this range, you should sell, right? Is you have another bear combo right there. Right there. So it took a while to break it, but we did break it. So now you could sell the close of 20, low of 20, but you should sell, right? So market is coming down. Is even there's another one here. I wouldn't really count this because this is the breakout anyway. So we're coming down, and then now we started to print bull combos, but they're not all that great, but I'm gonna mark it. So here is the bull combo right there, okay? And we did break it briefly, but because it's a bull combo, chances are this is gonna reverse back and get to the midpoint at the very least. So they trapped it, get back to and closed above it because bulls want to get back up there. Eventually, we're going to get back up there, but 50% and the upper third, they couldn't close above, so the bears are selling. Why? Because they had a bear breakout. They want to come back and test that low, that breakout bar 30 close at the very least if they cannot come down and test the 30 low. Market did come down and test the 30 low with bar 36, so all these bears sold bar 30 low, got a break even, but they ended up selling the upper third of the bull combo. So that's a limit order market. I call this a combo. I'm just trying to show people how, bulls and bears, how this can go up and down, what you should be looking for. So it's basically a tight trading range. It's a limit order market. It's a bet against market. So every time you try to look for a breakout, you're going to bet against it. And the upper third, you're going to look for a sell. Okay. So I'm looking to see is this going to go down or is this going to go up? So there is another, this doesn't count really, I would say this is a bear combo, this is a bull combo. That's why all that confusion up and down happened. Machines are confused, they don't know what to do. And they see a bearishness, they see a bullishness. So they end up scalping and exiting out. So now you have a trading range here, but we are making is lower lows and lower highs. So that means market is in some kind of a bear trend. So you should be looking to sell. You should be looking to sell at the key level. Market has been selling is the pullbacks to these moving average, okay, and even made a gap. And this has been how many bars? 20, 30 is almost 40 bars. And the first tag is, I guess you could call this, yeah, we're tagging, but we're not really touching with a body. That's more than 20 bars. So the first touch of, or the test of moving average will probably going to sell. And bar 38, 39 is, this ended up, is trying to become a bull combo, ended up becoming a bear combo. But this doesn't count. I don't like that. But it's an outside down bar, so you can actually sell that bar. You can sell one tick below. You want to sell a strong bear bar close to the moving average, especially closing phenomenal. You want to target these lows. Bar 40 is a breakout from the prior lows, so it's not getting follow through. That means pullback could be deep, but you should be expecting sellers to come back and test the low of 40 or at least the close of 40. We get 3 bars stuck within the inside of 40. Is you got another is bear combo here. So this is a tight trading range. I like to see now bears take out the 40 close with a bear body. 44 failed, but the 45 did. So now I can sell the close of 40, 45. I could sell the pullback to the breakout level of this box. I could sell one tick below 45. I'm looking for a stop order market. Okay, so it started stop order market. If you able to sell below and get more than 2 points, this is a good sell. But the problem here is where are the other stop order bars after bar 46? So we're going sideways once again. Yes, it's going down, but it's very slow. Bars started to get smaller, so momentum is waning. So I'm counting legs again. So I got 1, I got 6, I got 27, or I can count the bear bars. I got 6, I got 30, I got 40. I got 40, I got 46, and I got 52. So I've got nested wedges pushed as much as it could. I got 3 wedge bottom, and then the count began again here. So here's the 1, 2, and 3. But now I see the bars are getting smaller, and I kept telling everyone this is getting ready to reverse. Sometimes we get very close to the targets, swing targets, but we're not able to test. When something like that happens, okay, and that's coming from the hourly chart, when something like that happens, either we tested something on a much bigger, higher time frame, or closed some kind of a gap, and which was on the weekly chart, and that's why we're reversing quickly. But eventually, we will get back to it. When can that happen? Either it's going to happen after hours, or tomorrow we could actually get back to it if we don't become very bullish at the open. Okay, so is around these bar 50, 130 to 2 o'clock, we finally reverse. We do have a bull combo right here. It is a 2-bar combo right there. And the bull's got a breakout, so you should be looking for a 1R, 2R, 3R. Just project this box, just stack it up. That's your 1R, 2R, 3R. So bulls did phenomenal there, but remember what you're buying into is you're buying into a tight trading range midpoint. So there will be sellers. Do we have wedge top? You have some kind of a spike pullback and 2 more pushes, push 1 and a push 2. And now we're trapping the bear, so we're going to come down and test the bar 58. Bar 58, bulls will try to buy, but if they're not showing you strong bull bars closing above the moving average, this is going to fail and it's going to end up becoming a bear flag. That means you're going to have to look for bars closing below the spike pullback channel right there. So if you start to see this, but it's failing, and we break that, we break this right there, look for a quick pullback and sell and swing. The size of this projected down, size of this projected down. Okay, so that's what happened there, right? Bar started to break the spike pullback channel, bar 58 low and close. So you got a measured move there somewhere. You can measure from here, right? That is a measured move. The safest way I can measure. Or you could say, hey, I want to go for this, but I wouldn't. That is fake. I will not test that. So I would measure like this. And this is the measured move I would look for. Okay, so I'm trying it. Yep. So that's what I would look for. We couldn't really get to it all the way because I said, look, we have 3 bull bars, created another leg and a second one up. So from here to here is actually a buy zone. I wanted to see bears pushing down. They have tried, but look how many times they pushed and they failed, and at the end of the day, it actually reversed back up. So nobody wanted to sell inside this low, and then at the end of the day, we reverse. And I said we could go back and close around the moving average, and that's what happened. So if you're still selling with bar 77 and the bar 77 does not close bear body, there is a bear combo is right here, right? Is strong bear bar. And look at that bar's close and look at the next bar's open. This right here is the bear combo with 4 bars. Look at that. Bears try to sell. Remember I was saying in order for bears to sell and really get down to here, they have to close that bar 75 below the 74 close. They came down and tested. That's because there were probably sellers there still. They sold higher, came down. But the one thing that the bears failed to do, this should have gone up and then sell. So the selling actually began above 74, but it should have began above 76. So we needed to go up above 76 and then sell. That never happened. And then bear bar came down, failed, closed back inside. So what you need to do there is to find the 50%, find the upper third, lower third. If the bars start to close above upper third and taking out that bars, this is exploitation. So basically what you're doing is instead of looking for bear targets to downside, you're going to exploit this and buy, and that's your target. Is you take a little bit of profit there to how far, and then you take profit there. That's just exploitation. It's happening at the end of the day. Market sold too much. Nobody wants to sell. So sometimes these you're going to get these bear combos actually end up becoming a bull reversal spots. Okay, like it happened right here. Same thing. This was right here was the bear combo. It got a breakout, right? It got a slight breakout, but it couldn't reach its target, 1 hour target. So it reversed back inside. So if you actually just do this, right? So once the bulls actually start to close, they try to sell again. That's their way of fixing from the lower third. Look, sold, went back up, sold again. But that's it. They cannot close below. They cannot come down here. That means if we get above the 50%, get above the upper third, and we get a bull breakout, expect how far that, maybe even that tested. So that ended up becoming okay, we got our breakout, but we can't get our full target. It must be too low. Now expect price getting above the 46 high and trying to get a breakout from there. That's exploitation. But in the meantime, if you get a bull combo from the lows, use that one, right? So what are you expecting? You're looking for a bull bar breaking out. That's it. So now you can buy the close, you can buy one tick above, you can even buy the pullback. If you put a buy order here, you're going to have to cancel it. Now you buy, and these are your targets. So we got those. We even got the half before it came down. So you got you got 1, 2, 3, 4, 4.5. But you really, technically, you got 1, 2, 3, 3.5 because you entered late at the 1 hour. But still, that's a good setup right there. Okay. So to the person who asked for this, hopefully this makes sense. All right. So limit order bears well. Let's start. Stop orders under 3, 4, 5 and then bull bars closing. I would buy above 8, definitely 9, 10. But you're at the top of a trading range. There are limit sellers waiting there. So take profit and look for a bear body. Bar 12 is a nice bar, but it's a small trading range, so it's kind of like a leg in a trading range. It's big bar to outside down. There will be sellers stop orders under 12, but limit orders bear will sell higher most likely, but we have to give bulls to buy underneath, limit bulls buying underneath 10 and 11 to break even. They break even and exit out of the market, and market becomes bearish right there. I would be hesitant to sell below 14. I would probably sell the close of 14 or sell the pullback to the moving average because you're selling into this leg right here, 50%. I don't know. We have a breakout. This area buyers waiting. Limit bulls are waiting there looking for a pullback to the moving average, and they want to bring market above the moving average, but they fail. All they get is a scalp. Remember, in any channel, any bear channel, bears will swing and bulls will scalp. So this ends up becoming a scalp for bulls. So that means what it's saying to you is that you don't have too much space to go by. So you have to be in and out quick. You gotta pick your battles. So if the market is telling you this is a bearish day and you should be actually selling, chances are you're gonna be making a lot more money by selling than buying. So that's what you do. Okay. Bar 20 is strong, probably stop orders below. The lower wick is small, so I would definitely sell below it, but I'd be cautious because I'm selling into another low where the bulls were pretty strong and present. And that's therefore you get the sideways price action, but it's double top with 21.24. So that's game on for bears. I would sell below 24 is limit orders. I will sell these pullback probably around here. And then it comes down. I am congested today. Sorry, guys. I can barely breathe. So I'm breathing from my mouth. So mouth breather. Sorry about that. I'm just making weird noises. I'm running out of air, so I'm just trying to get a big air here, and I can barely make sense. So I'm tired. Sorry about this. It's really tough when you're talking and trying to breathe from your mouth. It's hard. So is sideways price action. Bulls are buying the lows, bears are selling the highs. So this is where we become a limit order market. We're going sideways. We're going sideways and down. So you should expect bears to keep selling this no matter what. But they're not doing all that great. So now bulls finally try, but they failed. Game on for bears. Stop order bears from underneath 39 is expect the prior lows to be tested. Bar 40 does. Now bar 40, if you put a sell order below bar 40, you don't get activated. It just goes against you. So that's because when you have a trading range and you get a nice breakout, generally first breakout, even it gives you a enough, maybe like a 5 point, 10 point, eventually it's going to reverse back to the 33% inside or the 50% inside, and then you're going to look to sell. So that trading range is right here. Is we get a breakout and it pulls back. It can't get to the 50%, but it definitely tests the 33%. Okay, so that's 33, that's 50, that's 66. Okay, so you can see if a bar closes very bearish back again outside the trading range, that's a stop order entry below 44. I could take that, and I should expect a couple of bars strong coming down. It's also a bear flag, double top 40 and 44. I have a bear flag. I should expect a nice couple of legs down. We get the next leg down with the 44 and the 45 and the 46. A pause sideways is small bear flag is, and then we get another leg down 49, 50, 51, 52. Bars are small, so we should be rotating soon. I'm not going to buy or exit out of my long until I see strong bull bars. Bars started to show up, but I told everybody I wouldn't buy bar 53 because bears are stuck, so they're probably going to sell the 53 close, and they will try to get back to the 51 low, 52 close. And that's exactly what they did with the 54. But now bulls are coming in, exit out of your shorts and buy, and I ended up exiting and buying. So I'm long. I held this. I just got I held it all the way to here. This was my target. So I took a lot of profit there. I was looking for a breakout, but it failed because the trading range, the bull flags will fail, right? So you got a bull flag, right? And it fails. So you get a second entry short from below 67 that there's enough distance to moving average. I could take a stop order underneath 67 and sell and expect a couple of legs down. Bar 68, cutting the moving average like a hot knife through a butter. So that means is I do have a gap here, is possibly this is going to go sideways and create some kind of bear flag. Bar 69 and 70 sideways up, but it is going to probably make a bear flag. I'm looking for another attempt to cut the EMA with a strong close, bear close, so I can sell below it. and that is bar 71. If you sell below bar 71, you're hoping market to come down to is bar 58 low. And we did. Bar 72 actually closed below 58 with a strong bar. So that means it's coming down to 54. Why is 54 important? Because 54, bears try to sell. It was a good bar, but they're trapped for the second time. So that's where they're trying to go. And that's what they did. But it's every other bar. It's alternating. So you have a leg 1 and a leg 2 and a leg 3. So you're pretty much done. We got a really nice inside bar 75. Probably buyers above it. Is sellers, could there be any sellers? If they're there, um, if anybody bought there, those buyers will buy down here once again, right? So because I said this whole area is a buy zone. So bulls are looking for two good buy signals. 75 is a buy signal, but it's an inside bar, so it's not all that great. So I need a better one. Well, the better one is actually bar 77. Why is bar 70? Well, it's a pin bar, and this is actually a demand zone. Demand zones, what we call strong buy zones. Okay, so is pin bars, doesn't matter what color they are, they're bull. If you're looking for a good buy signal bar, it could be a bear pin bar with a small bear body. Still, you can buy one tick above. And then you can see there we're buying 78 actually closed. That's a stop order market right there. But it's going to go somewhere, a breakout point, and that's where you need to be done with this trade because they can actually sell. And is that probably what they did? Oh yeah, look, they went up, and then they sold because this whole area is a sell zone from the upper wick to the lower wick, right? So that's the first sell. We might actually come back and then sell again, but I'm gonna check something. So if I actually go to, oh yeah, look at that. So this ended up becoming the sell. So you take profit there. That's the first sell signal bar, and then comes down. It's trying to get back up, but they could sell again. But who's trading that? Nobody. All right, so I'm going to take a few questions here. Okay, so I think I answered that question, Nikki. The next question is where did the 55.0575 come from? It came from the hourly chart. It was resistance, came down, right? Went back up, but could not maintain, came back down again. Then had a breakout. See that breakout point? That's very important. This is a breakdown. Breakout didn't happen there. Try to break down, went back in. This is where the bulls showed up. So we come back down, we get a breakdown, strong. There was a big breakout and a big breakdown. So to me, this is an important price point. And we get a huge breakout. Again, bullish breakout. It's not happening here, but it's happening here. So when I see that common price action, I mark that area and I expect next time price coming down that's what I want to see. Now I could be off a couple of points. How many points am I off? I am off 3 3/4, 3 points and 3/4 off. But I bet we're gonna get down there eventually. Anyway, so we're actually making, look, we made a new low, right? We're going sideways. We already trapped the bulls there. We have a double top. I bet tomorrow we're gonna test there. We might even break below, get back up, and if we start to keep coming down, this is the next target, 53.37 on the hourly. So but that's far away. That's way far away. I don't think we're going to be selling unless something happens tomorrow. I don't know what can happen tomorrow. I have no idea. But I don't think we're going to be able to sell that many points. That's crazy amount of points. Maybe next week. But we could come down to here, 54.73. That's about 30 points. Yeah, I mean 30, 35, 40 points. Tomorrow we could actually test here. That would give us another leg, right? Leg 1, pullback, leg 2, pullback, leg 3. Then we would reverse back up here again. So that's where it's coming from. I'll look at those over the weekends. It's also here, we kind of bypass that. But yeah, buy zone. They try to buy. Tomorrow or after hours, we could reach, tomorrow we could reach that area. I don't know. Buying is not all that strong, but it's getting strong. Okay, 3 bull bars. We came back down. It looks like they closed the gap, but they really didn't. They left bars are not overlapping. Wicks are overlapping. So therefore, you're getting this leg. Bulls want another leg and another leg. They're trying to get above it. Now, if we do get tomorrow above it, say we cross there, that will be my target, 56.03. 56.03 is right here, so we could actually get there tomorrow. Next question is how excuse me. How did you increase your size as you kept staying consistent? Well, you hold on. Excuse me. How did you increase your size? Well, you add to your, as you add your winnings, your account gets larger. So you take a look at your account. You should not be risking no more than 1 to 3%, no more than 3%. So if your account is a good size, you could say, okay, I'm gonna only risk 2 to 3% of my account. So you take a look at it and you see, okay, this is the risk, this is the amount of points I'm able to risk. Maybe it's a 5 points, maybe it's a 10 points. And I look at the ratio. Look, if it's 10 points, I cannot trade with 3, 4, 5 contracts, because if it goes against me, I'm going to be going to that 10 points risk. I'm going to be running through it like fast. Okay, so you don't want that. So you want to trade small contracts. So if I have 10-point risk only, I generally trade with 2 contracts. Okay, and generally that's with micros. Okay, if I have risk of 20 points, then I can trade with 4 to 5 contracts, right? That's what I could do. I can take swing trades, because I can take a pullback that can goes against me for 20 points. I could still hold it. Okay, so that's the kind of math that you need to do to figure out what's your risk tolerance, whether or not, how quickly you can run through it, and how many contracts would do that. If you're using too many, if you're running through your risks so fast, okay, that means you're using too many contracts. So you're going to have to figure that math out and just use less. Took me a while to figure out. I'm not one of those, oh, let me crunch in the Excel spreadsheet and find out. I mean, you should know by just looking at your account size that whether you should be trading with E-mini or micros. If you have a $5,000 to $10,000 account, I would not recommend you no more than 2 E-mini contracts. That's it. Then make that 10,000 another 10,000. Okay, then you can increase to 3 to 4 contracts. Otherwise, if you have a $5,000 account, you're only going to trade with micros. Don't even bother with E-mini. You're going to lose it. By the end of, you start with Monday with 5,000. By Thursday, that's going to come down to 2,500. and then by Friday it'll be probably be $1,500, and you're gonna wonder what the hell. You don't want to do that. So is figure out is you want to keep the risk as high as possible, as large as possible, right? Because if your risk is you know, not too large, that means you're not going to be able to swing. You are stuck scalping 1 or 2 points every trade until that is, account grows. So it's very difficult. Is unless you are good at buying in the right places and understanding where the stop orders are. I'm sorry, where the is, always in, right? So for example, bar 1 and 2, you don't know if this is always in, but bar 3 is. So let's talk about that quickly. So you count bar 1 and 2 as one bar, okay? And bar 2 is a breakout, a very strong bar. You can just measure from the low of bar 2, look for a 10 point. But what is the ATR, right? So around bar, let's see, is around bar 3. Okay. Okay. Around bar 3, ATR is, or was, is right there. It was 12 points. It was actually 12 points. Yeah, it wasn't 12.25, so it's 12. So it's telling you market is going to move minimum 12 points if 5 points is a regular scalp and 10 point used to be your is first swing target, initial swing. And the ATR is now telling, hey, your initial scalp is now 10 points, so you should be going for a 20 point. So you're going to look for a 20 point. So that means you're going to look for a 20 point and 2 ticks. So that's 82 ticks. Okay, and when it gets there, you're going to take profit. Notice this is not coincidence. Notice how these bar 6 is and 7 did not close below 2050. You only got these wicks. That's an overshoot, additional 5 points or so. You don't care for that. You're taking profit here. If you're holding a runner, hoping that this is going to come down, and you see the bars are not closing below the 82 tick, that's your cue. You better get the heck out of this trade because it's reversing back up. What does Al say is you need to now look for, you have 90% of the time is you're going to have swings in a day, right? Is a couple of, was it 90%? I forgot. That was a 90% breakout. It's too late in the day. I'm running out of juice, so I can't recall. But it's basically every day you're going to have at least 2 swings, okay? So here's swing number 1. When does the second swing begin? It starts after the 90 minutes, okay? Hour and a half, or at the end of the second hour, okay? Or you get a double bottom around 10 o'clock, right? With the bar 7, some news might be scheduled or may not be scheduled, but the machines know that close of bar 6 and the start of bar 7, hold on guys, could be actually a strong reversal, could give you a swing. So volatility increases. We don't trade with news. We don't care for news. We're not fundamental traders, right? We don't sit there and try to figure out if news is bad or good. Does this mean the market is going to move up and down? No, no, no. We don't do that. We don't listen to talking heads, NBCs of the CBCs or the RBCs or the JBCs. We don't listen to those guys. We don't care. But what you care, and you should know, and the L talks about when that news is going to be released and what the machines look for. Okay, so because that's when is you get volatility. The only time you should be a fundamental trader if you're trading crude oil. Crude oil exactly moves exactly what the outcome of the news, which is the gosh, I'm running out of words today. Inventory, crude oil inventories that week. So what does that mean? Is every week you get the report. So basically, report is telling you the inventories come out a lot more than what they had last week or is expected. What does that mean? That means there's something of more of something in the market. That's that's economics right there. So that's business, right? So when you have more of something in the market, what does that mean? Is you want to sell that, you want to sell it quickly, you want to move the merchandise, the product. The best way to do it, give it a sale. So you lower the prices so people can come in and buy it, so you can go buy a new merchandise. That's new merchandise, you can mark it up and sell it. So if there are a lot of inventories, crude oil inventories, that means is there's so many barrels of oil sitting there not being sold. So that means they lower the price, you expect market to come down, oil prices to mark down. And opposite is also true when the inventories come out less. So less of something in the market creates demand. Demand means higher prices. More people want to buy it, but less items available. So the sellers mark up the prices, therefore you pay a lot. That means crude oil goes up. That's the only time is you pay attention to the news. That's a lot. That's important. So what does this mean? So around 10 o'clock, I look for a double bottom, whether it's double bottom or micro double bottom. And you got a micro double bottom. Bar is closing higher. It's almost an outside up bar, but it's not an outside up bar. But it's almost, and it closed higher than the prior bars close and open. So chances are is you can is start. I don't measure from here. What was it then? It was around 1425, but you can. So you're looking for initial move 1425, okay? Or same 82 ticks. But I like to measure is when it's a doji and it's not all that great because the bar body did not close one tick above 6. And I'm buying against a very tight bear channel. I don't know if this is going to reverse violently or sharply. So I'm going to measure from here. That's my initial 20 point and 2 ticks, 82 ticks. But the bar closed above it. So I'm going to add another 10 points. That's 30 point and 2 ticks, and that's where I'm going to take profit. So basically I'm taking profit at an 82 tick, and I'm adding another is 10 points on top of it. It's 10 times 4, 40, add 2 ticks, so 42 ticks is I'm adding on top of it. So that adds up to be 30 points and extra 2 ticks. Did you get that? Yes. You should be taking profits. Is when the bar slams down, you're selling against a tight bear bull channel. Bulls are going to fade that because they're probably stuck up there. It's obvious that they are stuck up there. So they buy either underneath 10, 11, or is 50% of gap bar, which is ATR bar. So that's a pullback and buy. And they try to fade bar 12. That's what L says. They try, bulls will fade the strong bear body. And that's exactly what they did, but they could not close a bull body. Yes, they did, but that doesn't count. That's a very small bar. So it's not buyable. So now they sell. So what does that mean? That means is bar 12 is pretty strong. So if I actually start to count, where do I count? From the close of or the low of 12. At that time, ATR was 15 points. So it's telling you your initial scalp is 15. Okay, initial scalp is 15 right there. Look at that, bar 16. Well, it didn't really tag it, but it's about, right? So, but you should be looking for a 20 point and 2 ticks. You can measure from there. 20 point and 2 ticks right there. So got it about there. And that's why it ended up going sideways. However, this bar went up. So is this a good place to swing? Not really. Where would you swing? You need 2 bars. Oh, look, 14 and 15. Okay, I'm going to measure from here. Maybe here, maybe there, maybe there. Okay, so I'm just going to count from here. And I'm looking for is 20 point initial swing. Okay, that's one. Now I'll add another one. And market gave you this before reversing back up. Came down even more, but it got a really nice move up. So this is a lot. But you can see you got all that. You can't, that's a 40, that's 41 points. So from that 41 points, you can't get a 20-point run. You should be able to swing. So if you have a small account and you want to is test your trading skills, you should be a good swing trader first. So how did I get to here? What's the moral of the story? Moral of the story is somebody asking me, how did you add to your trades? So first, you have to increase your funds, right? You have to build your funds. And if you have a small account, you want to trade the micros. Micros are designed for swing trading. If you learn how to swing trade always in, what bar sets it up, what condition sets it up, it's all actually talked about in the Brooks Price Action uh, Brooks trading course, right? So also Brooks Price Action Encyclopedia chart patterns, part 1 always in section has always in long and always in short. There are a ton of charts explained and how L does his math to look for swings. So there you go. I just gave you an explanation here. You have a really nice bull bar, 53. Is this always in long? No, not really. You're stuck in here and the bears try to reverse it, but you are always in long now. What with bar 55 and 56? What was ATR around bar 56? It was around 11 points. Say 11 is, sorry, it was around 1075. So if it was 1075, I'm going to measure from the close of 56. You can measure from the high of 56, but it's got an upper wick, so I'm going to be conservative. I'm looking for a 10 and a half points. Okay, so here's my 10 and a half points, but you should be looking for a 20 points, right? So double it. So you're looking for a 20 points and 2 ticks. That's what you're going to take. Is if you leave a runner, so look left. If you're expecting follow through, will you get it? Probably not, because you are already pushed with 3 legs. You're at the top of a trading range. That runner may not be running. So be prepared to exit from below a strong bear bar or a second bear bar, such as bar 67. That could be a second sell, second entry short. But market will give you a 20 point. Is try to practice and stay in a trade with one contract and see if you can handle it. Okay? I'm going to take one more question and I'm going to end the session. I can't do the mother bar technique here, but we can do this another day because it's already 5:10, 10 after 5. It's just a long, it's a project itself. So, but we'll do it. I think tomorrow I'm off. I'll probably be on my Discord posting. I have a trade alert section, so I'll post it there. I actually explain on the charts, and maybe you can follow from there. Let's see. We'll go over it next week. It's according to your understanding best swing setups, which I talked about. Yeah, it's part 1, Patricio. It's part 1. It's the always in. They're also look at the S swing setups. So S is, I'm not sure. I think it's part 14 or 13 maybe. I don't know. Let's take a look. Now you may be curious. You can sign up for the Encyclopedia Slides database after 60 days with your course access. And then you get a lifetime access to it. It's swing setup, so it's got to be here maybe. Swing trading. We have a whole section. So go through. First, go through the first because L explained. Look at that 82 ticks. Look where he entered. Right there, he enters at the top of this bar. You can also count if the wick is small. You can count from the high. But if the wick is too large, then count from the close of the bull bar. But that's what he's going to give you a swing. Right? So he's explaining all of this. how to do the math is, oh yeah, okay, so 90% of the days you have at least one swing, but I'll guarantee you're going to get at least two. And I know the exact times they actually start. So I share all of that and alert everybody in the trade room. You have to really go through the charts to figure that one out. I wish these charts have actually time axis, but or the bar numbers. But eventually you look at the live charts and figure that out on your own. Or you can just simply count. I think L is writing a new book, Brooks Encyclopedia. So he's making a huge book. It's like a coffee table book, and he's gonna have bar numbers on them. So I believe. So anyway, you're gonna go through all of this. I'm not gonna go through it, but go study this in conjunction with the part is one, always in. Okay. First study this, and then study this swing. Okay. Hopefully this helps. Um, okay, I am done with questions, everyone. I'm sure there are a bunch of other questions here. I can't take them all, but if I did not answer your question, please bring them on, or just find me on Discord tomorrow. I'd be happy to conversate with you, no problem. Or ask me next week. I think I'm on Monday again. Sometime next week we can circle back. Okay. All right. You all have a great evening, and I'll see you guys tomorrow. Bye, everybody.